Good morning, students. Today we are going to start another virtual class. The topic of our today's class is performance incentives. See, in our syllabus, there is two words mentioned. The first one is rewards and second one is incentives. In previous virtual classes, we have already covered the different types of rewards. Now we are going to start the performance incentives. Incentives means the extra amount the employee earn with their better performance in the organization is known as incentives. Incentives basically are the extra amount which is paid to the employees for their extraordinary performance in the organization. Undoubtedly, monetary incentives are considered as the best motivation source for the employees. In every organization, employee believes if they are performing very well, they should be rewarded in the form of monetary incentives. So the organization always prepare different incentive plan to boost the morale of the employees as well as the production as well as the output of the organization. Now in this chapter we are going to discuss different forms of incentives, importance. So this is the presentation includes various topics, the meaning of incentives, why incentives are important, what makes an incentives plan effective, basic forms of incentives, classification of incentive plans. These are the structure that we are going to discuss during our this virtual class. Let's start the meaning. Earlier we were discussing about the meaning. The term incentive mean something which encourages a person to do something or the extra financial reward motivation. See, a very simple definition, something that compels the individual or group in the organization to do extra for the organization. This extra, the rationale behind this extra is incentives. See, it is a vice versa concept. When one person motivates to do something extra in the organization, the rationale behind that person is money. When the organization promotes incentive, they are concerned with the more revenue, more output, more growth in the organization. See, so we always call incentives is a vice versa concepts. Now the next is why incentives are important. Incentives are considered as beneficial both employees as well as the employer in the organization. See, the same I have discussed earlier. Workers are likely to work at their best when they are offered monetary rewards for the good performance, and em- employee gets better results and they achieve their targets. So this is called a vice versa concept. Here workers they perform very well in the organization to get more incentives, and even organization they are also ready to pay the different forms of incentives so that they could achieve their annual as well as semi-annual, quarterly or monthly targets. Now next is what makes an incentives plan effective. See, there are certain reasons or importance which makes the different incentive plan effective. The first one is payment of incentive plan should be free from bias and established through scientific and proper work study. See, the first and the foremost reason is whenever the organization has to design a different plan, incentive plan for the employees, is it must be free from biasness and it must be established through proper study. It means, see, we have to design the different incentive plan in such a way so that it could benefit to all the parties in the organization. The second one, it should be easy to understand and simple to operate so that the employees can also calculate their own earnings. At the time of designing different incentive plan, it must be considered that the formation or designing of plan must be very easy. So at the end of the month, the employee can calculate their monthly incentive. The calculation part must be easy. The third one, it should provide equal opportunity to all workers to earn incentives pay. See, we have to design the incentive plan in such a way so that each and every employee who is working in the organization can get the equal opportunity to earn incentives in the organization. So plan should be flexible to adopt any changes later on. So whenever the organization design such types of plan, see, they should be designed in such a way so that on later stages they could easily made certain changes as per the requirement of the organization. Next is, it should be adequate to motivate each employees. The plans should be designed in such a way so that it could motivate all the employees. See, sometimes when organization design plans which are not as much as attractive to the employees, and at the end the organization didn't get any results. So the better way is we have to design in such a way so that it could attract and motivate each and every employee in the organization. The last but not least, every plan should be reviewed periodically. Reviewed means, see, whenever a different plan is designed, it is necessary that we have to review the plans whether these plans are easily adoptable by all the employees or not. So the better way to review the plan is we need to take the feedback from the employees, and we need to work in case of certain changes are required. These changes could be implemented in the favor of employees because they have to work in the organization, and if they are willing to work on the existing or some changes required in the plans, then definitely they will be more directed towards incentive plans. Now the next category, basic forms of incentives. See, in this virtual class we'll discuss three types of basic forms of incentives. The first one is bonus. Bonus incentive payment, that is supplemental to the basic wage for cost reduction, quality improvement and other performance criteria. See, the bonus which is always paid at the end of financial year. See, earlier when the concept of bonus was introduced, there were three criteria on which bonus was paid. The first, that was on production. The second, that was on productivity. The third, which was on profits. See, the later on stages, the first two criteria, production as well as the output, has been discarded by all of the organization, but still it exists in the definition of bonus as per the Payment of Bonus Act. Now most of the organization, they have adopted the third criteria, bonus on the basis of profit. See, as per the Payment of Bonus Act, The calculation of bonus is always made on profit earned by the organization in existing financial year, and it is distributed to the employees to the next financial year. See, most of the provision related to the bonus we have already covered in different classes, but here if the organization has to distribute the bonus amount to the employee, the best way is they need to calculate the bonus out of the profit. The range of the bonus is pre-decided in the act, that lies in between 8.33 to 20%. But nowadays the organizations, multinational corporations, they have already decided the bonus amount in your CTC, that this particular amount to be paid to the employees at the end of the existing year. The amount is specified, but they have not specified the actual percentage to be given. The actual percentage is always calculated at the end of the existing financial year. The next is merit pay. Merit pay is another concept which is adopting by most of the multinational corporations. See, as per the concept of merit pay, now organizations are paying to their employees on the basis of certain parameter. The first parameter as per the government policy is fixed, that is basic pay. The basic pay, which is always paid to the employees. Another component is the performance. Performance means now after paying the basic pay, the organization will pay to the employees on the basis of their performance in the organization. See, when we were discussing about the different pay for performance plans, we were discussing different types of categories, such as the first one is profit sharing. Under the profit sharing plans, it means if the organization earns profit, definitely they'll distribute the part of the profit among their employees. Second one was the risk sharing. Under this risk sharing, in case there will be a profit, the organization will distribute the profit, but in case of risk, this proportionate part will also be distributed among the employees. The next category or the next form is commission. Commission, which is a very traditional as well as very popular terminology in nowadays. Most of the companies follow this commission pattern to attract the employees in their organization. The first type of commission is 100% commission. 100% commission is applicable to some industries as well as the companies where the employer didn't get any sort of basic wage from the employees. Whatever the work he performed, in lieu of that work, he gets commission from the organization. The best example of 100% commission is insurance agents. Insurance agents are those persons who are working on the behalf of the company, but they are not on the payroll of the organization. They are just selling the product of the organization, and in return they are getting the certain percentage of commission from the organization. See, such type of category is also considered as a freelancers. Under this category, organization need not to pay the basic wage to the employees. Whatever the task they perform, in lieu they get the commission from the organization. The second category, basic salary plus commission. So another category is कि under this the person is working on the payroll of the organization, but apart from the basic wage, he's also getting the commission from the organization. See, like in banking sector, in insurance sector, some manager, they are putting on this category, they are also earning the basic salary plus commission. Whatever they are performing, they are also getting the commission from the organization plus the basic salary. The third one is revenue commission. Revenue commission, it is it is the category which is related to the second one. Under this category, the person will get the base salary from the organization plus whatever the revenue the organization earn, he'll get certain proportionate from the management. See, this category is little bit different from the second one. Under the second one, the person will get the commission of selling those product which is selling in the market. But in the third category, the person will get commission out of total revenue that the organization earn, and this percentage is little bit higher as compared to the base salary. Okay student, this is all about the first part of the incentives. The remaining part will be discussed in part 2.